Asset disposal and depreciation, we look at the 2013 question 1 as our example. We've got machinery that cost €270,000 in the trial balance, on which we've written off 90,000 in depreciation already. So the question tells us that we disposed of a machine that had originally cost 20,000. So we've got to take that out of machinery at cost figure, and we'll put it down in our asset disposal. And now we've got to calculate how much depreciation has been written off the machinery since we bought it. And we're told that we acquired the machinery on the 30th of the 6th, 2006, and that we disposed of it on the 31st of the 3rd, 2012. So we have it for 6 months of 2006, then for all of 7, 8, 9, 10 and 11, so that's 5 years. And then 3 months of 2012. So we've got that machine on, we've had it on hand for 5 years and 9 months, so 5 3/4 years. At our depreciation is 10% on cost, so €2,000 per annum would give us depreciation written off the date of purchase, the date of sale of 11,500. So we should take that out of our provision for depreciation, 11,500. If we compare these two figures now here, the machine cost 20, we've already written off 11.5. So that gives us a net book value of 8,500. Now the question tells us that we traded in against a new machine costing 51,000, and we got a trading allowance of 8,000. So we got 8,000 for this. 8,500 versus 8,000 means that we have a €500 loss. And as this is a manufacturing question, we'll put the €500 loss into the manufacturing account as an overhead. Now we got a trading allowance of 8,000 for that. So we have 8,000 plus the cost, plus the amount we paid for the new one. Now it costs 51 trading allowance of 8, so we paid 43,000 for it. But in error, we've put the 43,000 inside of the purchases. The question says something like, was treated in error as a purchase of trading stock. So we've got to take the 43,000 out of here, out of purchases, and add it to our machinery at cost. You'll see now that we've reduced our machinery at cost by 20,000, which was the disposal, and we've added in 51,000, which is the cost of the new machinery. So we're up 31,000 in machinery, so our balance sheet figure should be 301,000. Is that right? 23,841. 301,000 will be the new figure for cost of machinery. And now we've got to calculate the depreciation for the year. And the question tells us again that it's 20% of cost. So what I find easy is to ignore the new and the disposal for a moment and say, well, our depreciation for the year is 10%. So 10% of the original cost, which is 270,000, will give us 27,000. And then that ignores the new one that we bought on the 31st of March. So we must add in the depreciation on the new one. So that would be 3/4, that's 9 months, of 10% of 51,000. So that would give us an addition of 3,825. And the 27,000 includes a full year's depreciation on the one we got rid of. So it shouldn't. So we must take out the excess depreciation on this. So take out 3/4 of 10% of 20,000, which is 1,500. So our charge for depreciation for the year would be 29,325. I find that a convenient way to calculate it. So we must put in €29,325 for the depreciation for the year. So let's recap now. We've increased the value of our machinery at cost to 301,000. We've adjusted the provision for depreciation to whatever it is we get when we do these calculations. We have a loss on disposal, which we put into the manufacturing account as an overhead, and also as an overhead in our manufacturing account will be this year's depreciation of 29,325, and we've adjusted downwards our purchases by 43,000. There is another purchases adjustment in this question, but it doesn't relate to this note. So, there you are.